Hello traders, if you're looking to simplify your TA, GoNoGo Charts is the tool for you. In this video, we're going to be joined by Alex Cole and Tyler Wood, founders of GoNoGo Charts. They're going to be teaching us everything that we need to know about the indicators and how to utilize them across TrendSpider. Let's jump in.
Tyler, let's break it down. What are we trying to do here with GoNoGo Trend?
Well, we know how essential it is to have a disciplined technical process when you're looking at charts.
Absolutely. It helps remove doubt, it helps remove confusion, and of course, emotional bias as well.
That's the power of technical analysis. After all, price is fact. We also know that building a well thought out checklist can overcomplicate things, and that can lead to analysis paralysis. So GoNoGo Trend builds that checklist, that multi-factor model in the background, using the foundational concepts and tools from the discipline of technical analysis. And that color codes the bars or candles on your chart according to the strength and direction of that security's trend.
Yeah, and when we do that, what we do is keep the insight, but lose the clutter. And having a clear understanding of trend at all times can only help us as investors.
The beauty of technical analysis is that this works the exact same way on any security across all asset classes and over any time frame. From tick charts to monthly charts, it's the exact same way.
After getting a good overview of the nature of a security's trend, an analyst will surely want to understand momentum next.
Absolutely. Trend identification is a lagging indicator by its very nature. Momentum indicators are leading indicators, and they can tell us so much about the velocity of price movements. So let's take the same approach that we did with the GoNoGo trend. Adding panel after panel after panel onto our chart with various momentum oscillators and indicators is only going to add to that complexity of what we're looking at and to the analysis paralysis. It makes our clutter even worse. So with GoNoGo Oscillator, we blend several of the most well-used, robust momentum tools, as well as volume, into one oscillator that simplifies our readings.
Our oscillator moves within a simple bounded range from -6 to +6. And as with any oscillator worthy of its salt, we can look for areas that are overbought or oversold, as well as divergences. But it's the power of having an objective zero line that sets the GoNoGo oscillator apart.
Absolutely. This indicator is calculated in such a way that when all of the momentum inputs, that weight of the evidence, are in their respective neutral territories, it hits zero. And that gives us an objective level that can be used as support or resistance when a security is in trend.
What we've found working with clients all around the world is that it's the interaction between trend and momentum that drives decision making.
That's right. And using some data visualization techniques, we can highlight important situations about that interplay, but keep our eye focused on price action itself. After all, it's price that pays. And price is never an estimate, and it's never restated.
So we've got two types of icons on the GoNoGo chart. I'll talk about the first one. We have counter trend correction icons, and that's when we use momentum in its traditional sense, highlighting areas of overbought, oversold, knowing that it's possible then price will correct against the current trend in the short term.
And the second type of icon, perhaps the most powerful for trend following investors, is that trend continuation icon. That tells us when momentum is resurgent in the direction of the underlying trend. Those movements often are relatively low risk opportunities to participate in price moves.
We've already talked about how GoNoGo charts can give an analyst a complete understanding of trend, momentum, and even volume. And we've shown how we can use data visualization icons to highlight important moments on the chart. So what's the last piece of the puzzle?
Volatility. Now, many investors think that's a four-letter word, but we think the opposite is true. We want to embrace volatility and use it to our advantage. We know that after periods of low volatility or volatility compression come periods of higher volatility. And that can be in the form of an explosive trend either beginning or a mid-trend surge after a consolidation.
And so as users of GoNoGo charts, we already understand the importance of the oscillator zero line. Remember, when the oscillator is at zero, all of the momentum inputs are in their neutral territory. So therefore, when the oscillator gets stuck at zero, we can say that for an extended period of time, there has been very little directional momentum.
And that's that tug of war between buyers and sellers. And we know that for every bar that the GoNoGo oscillator remains at zero, that amber grid of the GoNoGo Squeeze builds until it hits its max. We can then watch for the direction of the break, either positive or negative, and to be ready for often high velocity price moves in the direction of that break.
Now that we understand what each of the GoNoGo Charts indicators is telling us, as well as the key conditions to look for, let's dig into how TrendSpider tools can be used to identify, monitor, and even strategy test the names meeting those key conditions right now. First, as we learned earlier in the video, momentum resurgence is the most powerful setup in the GoNoGo arsenal for trend following traders. So if you're looking for stocks that are setting up for the next leg higher or lower, try utilizing the GoNoGo Trend Pro in TrendSpider's market scanner. With a simple condition, you can define the green or red dot that denotes a momentum resurgence, allowing you to instantly identify key names experiencing strong upside or downside momentum right now. The GoNoGo Squeeze shows us that the most powerful breakouts occur when volatility gets compressed, but monitoring every name we care about for this volatility compression can be time-consuming. Using TrendSpider's multi-factor alerts with a single condition, we can define that the period of compression has come to a close and the stock is ready to make its move. If we want to supercharge this alert, we can also define the direction of the oscillator. That way, we're only alerted if price is moving in the direction that we're interested in trading. Finally, we know that many traders want to utilize the standard GoNoGo trend across TrendSpider's tools, and we're pleased to announce a new solution called the GoNoGo Trend Histogram. With the GoNoGo Trend Histogram, each color of the GoNoGo trend is given a numerical value. Strong Go is 4, weak Go is 3, neutral is 2, weak no-go is 1, and strong no-go is 0. With these values, we can easily define GoNoGo trend readings in the market scanner, alerts, even as entry and exit criteria in the strategy tester. In this example, the strategy enters into a long trade when the GoNoGo histogram is greater than or equal to a value of 3. This means that the strategy is entering when either a weak Go or strong Go reading appears. The strategy then exits when the GoNoGo histogram prints a value less than or equal to 2, meaning that the trend has shifted from a Go reading to a neutral or a no-Go reading. We can test this strategy on our favorite name or bring it into the Strategy Variance Explorer and test it across our favorite names, time frames, and look-back periods up to 52 variants at once.
So remember, remove the endless indicators, be free of analysis paralysis, but still maintain a responsible multi-factor approach and a complete view of the technical conditions for any security on any time frame.
After all, from better charts come better decisions. Check out GoNoGo Charts here on TrendSpider.